This is a hot debate right now, and I see a lot of traders transition towards futures. I don't have too much exposure in the space, but since you are trading all of them, what is the lessons or approaches in each?
Yeah. So first of all, I highly recommend actually to just trade one. I would not say instrument, but I would say what was the right word? Why one asset class? I would say like this. So for me, it was S&P 500 at some point. I just now only trade S&P 500. So if you understand the product you're trading, I'm not okay. Options is also a product, obviously, but just talking about S&P 500 or Nasdaq, some people like to trade that. If you understand the way that moves and why it moves, also that's maybe even more important, you can then make a decision like, okay, I want exposure, or whether just by holding the CFD or just trade the futures. Or you would say like, okay, I just sell, if I'm talking about options, I'm just usually selling, I'm selling options. It depends on the market. Obviously right now you don't want to sell calls, right? And selling calls basically means like you assume that the market go down. It's not something you want to do in the market. It's just keep pumping. What you want to do in a market that keeps pumping is just go long with futures, right? Just have a leveraged exposure to the S&P 500. The S&P 500 tends to go up, especially now. But then it's just an easier choice to do that. Or the CFD. The CFD or the future doesn't really matter.
So between options, CFD, and futures, is there a way to manage it as a portfolio where you're hedging your risk based on the?
Yeah. I wouldn't. Okay. It's not something you would do as a beginner, because you would definitely, especially with the options, you would definitely blow your account. But yes, at some point, I think you can. You can see it as a whole portfolio. Okay. What you can do is you can go long, for example, on futures and try to kind of like sell options around it. That kind of like finance your future position. But I would say that's not really a beginner-friendly approach. But it depends on the market, actually. It's like the trading strategy I'm using. I don't even want to call it a strategy. It's just I buy on key levels, buy and sell on key levels. People call it support resistance. You can call it whatever you want, but it's a very simple approach.
And would you consider yourself a more technical trader, or assuming because you have a lot of collaboration with Bernd and he's very fundamental based? Are you very fundamental driven, or how is your ideation of a trade and then execution of a trade? How are you mixing that?
Yeah, so of course, I'm good friends with Bernd, so I know his strategy in and out. The way I trade doesn't really align with the way Bernd trades. I'm very technical. So I trade, if I day trade, which I don't have that much time to do it anymore, but if I day trade, it's just key levels from yesterday low, yesterday high. As I always say, just open a chart, go to the daily chart from S&P 500, go to the daily chart, mark the yesterday high and mark the yesterday low and mark the yesterday close. And just see how the price will react around those levels. And you see endless opportunities for rather scalps on just CFDs, funded accounts, or whatever you're trading.
That approach, when you're saying at key levels, you're looking for reaction or confirmation.
Yeah, it was just reactions.
Are you pairing that with, or assuming that is an underlying liquidity manipulation, or what is happening on those key areas that you're looking for?
I don't use any terms like, I know like in the smart money concept there are like a lot of like fancy terms for it. Once again, I learned trading around 10 years ago. There was, per my knowledge, no such thing as smart money concept. Maybe there was, I don't know, but at least I don't know aware of it. The reason why yesterday low is a key level, in my opinion, is whenever somebody buys yesterday, they most likely will rather defend or stop, have a stop around that place, right? The same for yesterday high on the shorts, right? The yesterday close is just saying in the market that most gaps will be closed, and usually you will see a little reaction, which is enough for a day trade or a little scalp. So it's just the market works that way.